Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for April 8th, 2025. Woozy. You know, we thought Monday we might have formed the bottom with the reversal in the futures from Sunday night on, but as I said in my video, was it the bottom? Well, we'll see. We'll see if that one holds, or are we going to begin a new leg down. So retest of the Monday lows on tap. Will we hold, or is it time for the next leg down? We'll talk about 2008, and there's a corollary there, which I'll show you. Again, my name is Jeffrey Scott. Email address marketmripro@gmail.com or htsIdoc@gmail.com. As always, anything I talk about should be considered informational and for educational only and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Not that we're going to mention a lot of stocks today. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. And I have tools in multiple platforms, but I'm pretty much concentrating these videos using my own tool called the Market MRI Pro trading app, which I released to a small number of people a few weeks ago. And now that we've had a chance to have more users and stress the servers, we'll be releasing it more broadly sometime in the middle of this month. Hope you can join us. Orange County, June 6th through 8th, Residence Inn and Suites, Tustin, Orange County, California. Ready to announce my next speaker. Pretty much all arranged, I hope. Will be John Person. I've got more on tap. Greg Mills is in charge of the meeting, GAM72054@AOL.com. And again, I usually have 4 to 6 speakers. John makes 2. Hopefully Dev will be there as number 3. Chris White is number 4. And I got a few others that I'm thinking about inviting. My top-down group, this is called Top Down Trader. It's a Google group. It's free. Why would you join? Because there's a good chance that 1 or 2 of these videos will never make it to YouTube. I just do it for my group. We also have a dialogue during the day. And you can choose whether you want multiple emails or just a digest. And you'll get discounts on my technology if you decide to buy any of my tools, and a lot of free education. I keep talking about 2008. We're going to see that what we're seeing in the markets right now from a buckets perspective. If you think about the buckets, think about a Bollinger Band on a stock. It goes from 0 to 100 from the bottom of the Bollinger Band, percent B is 0, to the top, percent B of 100 or 1.0. You can make 10 groups of 10% between the two, and I call them buckets. Then you have a bucket below and a bucket above. We are in a position in the market where an increasingly number of stocks are below their Bollinger Bands. Now, if the intent of a Bollinger Bands is to capture 90% of a stock's move in a year, and I tell you that 80% of the stocks are now below their Bollinger Band, don't you think we're getting close to a point where we're going to get a major rebound? We saw that during the day, I believe on Friday, when there was some fake news about the tariffs going away. We saw it hope that a lot of people were lining up to negotiate that Trump might back down on Monday, and that's why we saw the reversal. And then on Tuesday, we saw the escalation. We are near unprecedented levels. The point of this slide is, even though it's really oversold, who says it can't get more oversold? So we are starting to approach this look with 80% of the stocks in the S&P 1500 below their bands. The question is, how much further will it go? Or will it go further at all? Know your news and earnings. So Wednesday, we got some inventories and Fed speakers. And I think everybody's listening to hear, are they thinking more towards easing as concerns about a tariff tantrum recession continued to grow. But then we've got the CPI, lots of Fed heads on Thursday, and the PPI on Friday. So if you like volatility, you're in a good place to be. You look at earnings, Delta really be the first one I'm going to care about, which is in the morning on Wednesday as we start the next cycle of quarterly earnings. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go look at the charts. So this tool is called my daily performance, and I always like to start with this because it gives me a sense of what's going on in the market. Well, when you see that the VIX led almost up 15%, and then the major indices were led to the bottom by IWM minus 2.6, Q's 1.8, Spider minus 1.5, and the Diamond 0.8, you know it was a tough day, excuse me. The sad part is we opened above 3% and down 8 on the VIX. We got as high as up 4.5% on the Qs. And although we are off the lows, we're much closer to the lows than we are than the highs. So this was a failure day. That's not a good sign, especially after that first day of an attempted rally. And if we look at the closing range, the one that finished closest to the top was volatility. I noticed early on, even with the market rallying, which still didn't have any the number of new highs was still very small. And you could see the new highs minus new low are negative on both the NYSE and the NASDAQ. On what was working from the various sectors perspective, financials, utilities, industrials, healthcare led. Some of the more defensive, although staples, which had been doing well, was not leading, was down 1.5%. And the laggard was materials, real estate, discretionary. Technology was pretty weak as well. From a theme perspective, only two were positive, aerospace and gold. Now, perhaps the scariest thing is if you look at stocks above the midline of their Bollinger Bands, 2% of the S&P 1500, 8% of the NASDAQ, and 3% of the NYSE. We are at getting towards unprecedented levels of being oversold. If you look at sectors up versus yesterday, none of the sectors in the 1500 were up. Only 7% of the industries, 11% of the stocks. NASDAQ was a little bit better in that you had 7%, one industry of 11 was up, 10% of industry groups, one of 11 sectors, 10% of industry groups, 20% of stocks. And the NYSE is similar on the sectors, 9% of industries and 18% of stocks. So overall, a very weak session. Now, let me just flip into the buckets real quick. And this is the one that matches up mostly with the slide deck that I showed you. So if you think about this slide here, and you think about October 9th, 2008, we had no stocks above the midline, and we had between 70 and 80% of the stocks below the Bollinger Band. Now we look at where we are right now in the S&P 1500, and let's highlight this, 83% of the stocks are below the Bollinger Band, 75 on the NYSE, 73 on the Russell, and 55 on the NASDAQ. This looks just like that slide. So from this perspective, we really are near that bottom that I thought we might have hit. Now, we also looked yesterday at this slide, which looked at the 2121 stocks at 13-week new high, new lows. And we're at the level you expect to bounce on the weekly. 0.14 doesn't look like it changed at all. And you can see stocks above the 40 kind of getting back to those 2020 levels. Excuse me. As are the stocks above the 200. So by every means that I look at, it looks like we're getting to a point that you're going to see a rebound, not a recovery. I thought we had it Monday. Maybe not. If we look at the markets, let's go into TradeStation for a second. And I think I've got it loaded up. So let me just load up two of my favorite workspaces. And let's load up futures, two futures things. And just going to look at where we are overnight. It's 10:17, and I think you're probably well aware the markets are trading lower, and the VIX is going bananas. So you'll be able to see the VIX over here in a second. Well, you will when this finishes. All right, well, I'm seeing things that I didn't see when I looked last time. I had to go watch Lioness, which we really are entertained by. Sometimes you just got to look away from the markets. What we're seeing now does not look too bad. And this is supposed to be the ES. So hold on a second. Yes, the markets are down a lot. But let me just show you what we're seeing here. We are seeing another long tail forming across the futures. This is what we saw on Monday before the market opened. That's actually interesting because when I looked earlier, the futures were much further down than they are right now. So, but the futures are off. You can see here. Oh, you can't see minus 36 on the E-minis. Looks like 80 something on the Nasdaq, 270 on the Russell, 20 excuse me, on the Dow, 21 on the Russell, and Bitcoin's down as well. Sometimes you'll see these yellow bars on a reversal day, so we'll see. And I mentioned the VIX has gone to town. Um, the VIX, at least the VX futures, and we'll look at the VIX in a bit. Um, Really getting up there, got up to about 46. And let's just blow this thing up. This is where the other peak was in August, and we've exceeded that August peak and blow off. And then if we go further to the left, well, you can just see how it's come down over time. All right, let's go take a look at the market breadth signals. And again, don't want to overemphasize the obvious. We're looking here at cash markets. We did not get a bottom here. In fact, we had a big topping tail here, but kind of the little one on below. We traded lower on the NYSE despite opening here, trading higher, and then breaking down and closing. All of it on the Chinese tariff stuff, I believe. Similar on the NASDAQ. Now, Trump tariffs giveth and taketh away. All it takes is a tweet or a comment that we're going to delay, we're going to negotiate, and I think you know what the market's going to do. The question is how far it will rally. But you could see new high, new lows. Looking over here on both sides, new high, new lows, advanced decliners, up, down volume, all decisively negative. And what's also new, another baby out with the bathwater signal here. I believe there's one underneath there as well. And there's a Phoenix. So Phoenix is a sign of market significant negativity after a big sell-off. I mean, the Phoenix up here was worrisome. Sometimes this is an overkill exuberance and a prelude to a reversal. And if we go, let's now go look at the timing model, which I think you would expect it not to have changed. But what I want to show you is it has changed on the monthly. We've now broken down enough that we're into a sell signal on the monthly. This is more for interest only. I don't trade off the monthly. The weekly determines my main stance in the market, and the weekly has been on a sell signal for several weeks. So I should switch here. You can see the breakdown, and the sell signal came in much earlier than the big breakdown. Now, one question is, did we have a leg down, a leg up, a leg down, another leg up, and then a breakdown? Or are we still in the second leg of a three-legged bear? Time will tell. You can see that 13-week high-low on every indice is down to the zero line. So all the weeklies, this is the buy-sell line at the bottom, are in a sell. And if we look at the dailies, which will obviously flip first, they're all in a sell as well. So this is still a relatively bad market. Just to look at the close on the market, we've already reviewed the performance. We're above the 200 on the weekly, but let's go to the daily and look at the daily chart. So we've fallen pretty hard, and what I've been expecting is to rally up and fail. I didn't expect us to rally up and fail on the first day, and that could be a pretty significant bear trap, or excuse me, bull trap if that's what it turns out. Now the question is, does this line here, I don't know if we turned this on, I think we did. Will this line that I just drew, well, will this hold? And that to me is a big question. If we break through um, the Monday low, then I think we've got another leg down. So you could see failed reversal on the spider, the Qs, the diamonds, the Russell, where we had a gap open on Monday and a close down, still finishing up but well off the highs on the VIX, getting above 60. We're up again overnight. This would be, actually this is what we saw on Tuesday. Dollar on Tuesday, not really doing much, was down a little bit. If we look at commodities, with the dollar down and concern in the market, you can see that up a little bit, 0.5% or so on gold. That's a weird looking candle, white with red. On silver, yeah, silver is being weird. Looks like it may have been relatively flat. You can see that oil continues to break down, as does natural gas, and the 10 and the 30 year were both up. So if I had to summarize where I feel we are in the markets, I have to go back, and I mentioned 2008, so let me show you 2008. And let's bring this open, and let's go to October 8th, 2008. Now this is going to be right in the middle of the chart. So October 8th is here. And the reason why I want it to go here is this here, which is that's the 9th. All right, is that the 8th? That is the 8th, and this is the day when it looked like we hit a low. And we ultimately did hit a low 2 days later, and we rallied, but we continue to fail on the rallies. And we didn't set the ultimate low until late November in 2008. And why am I saying this? Because I kind of have the feeling that this is where we are right now. And we have put in a short-term bottom. And this would have felt really good here, a double bottom. But there's still a chance we're going lower. All right, if we go into this layout, we can start to look at stocks. We have about 3,589 stocks in our data set. There is some dirty things that came in. You can see things with zeros in them on change in percent. That may be true or it might be bad data. We're actually having some issues with a data provider this evening, but I think I can still show you a couple of things. If I go into my list I put together here of the MAGs and APP, it tells you what happened in the market. If you start with Amazon, opened up here, closed down there. Red bar means it was down. Solid means that the close is lower than the open, down 2.6%. APP looked like it was really breaking out. Came back in, closed just positive 1.3%. Google broke out at the open when the market was up 3-4% and closed much lower in the middle of the prior bar, down 1.4%. Meta, ditto, down 1.1. Microsoft, ditto, down 0.67. Netflix, again, this is what we saw. Big opens and closed, and this one still finished positive 0.296, well off the highs. Nvidia even flirted with 101 and closed down at 96.3, down 1.3%. And then Tesla So many things going on with Elon. Traded higher, ended up finished down below the prior close, down almost 5%. So it was a tough day. Lots of bull traps there. Breakouts. Everybody thought we're going higher. Um, Pretty amazing, isn't it? Um, we can go into the impulse and do our scans. So let's just look at this and let us look at volume greater than 500,000. Lowers our stocks down to 25.59. Now let's add price above 5 because that's the world where I live in. And typically I want to buy things that are above their 200 moving average. And look at this. We're down to 356 stocks. And then I might look for things that are positive signals. So let's look at 2 days Momo up. Nothing. Let's look at multi-time frame CPR. Two things. ATSG, buyout candidate, who cares? UFG, it's a low-cost Unifuels holding. Don't know anything about it. Looks like it's an IPO coming out of a base. Actually, a good-looking chart. Won't have much in fundamentals. Doesn't have any news. Marine Fuel Solutions, headquartered in Shanghai. Nothing that exciting. Cheap stock. All right. How about the EMS cross up? And this is the one we'll probably see some. I got to kill the multi-time frame here. And we'll just look at these very quickly and then just say goodnight. And let me just sum up my feelings. One of these days, we're going to stop going down. Right now, Monday looks like a bull trap. Excuse me, Tuesday looks like a bull trap. Monday set the trap up. Wednesday, probably going to open lower, although we're seeing some bottoming wicks on the major index futures. But are we going to break the Monday lows? And to me, that's going to be a critical thing to watch. Am I advocating going out and buying stocks now? You got to be careful, and probably the answer would be no. If we get a rally, I might look at some index ETFs, but I'm a little bit afraid to go much more heavy into stocks until we have a clear reversal and probably that O'Neill type follow-through day, which the earliest would be Friday. And you'd have to see up 1% in a major index with higher volume. So Agilon's interesting. Here's one that is really sold off, bottoming here, pull back to the 200, and then it had a big gap on news. They're a physician group that services Medicare Advantage, and the rates were massively increased. And if you think about it, think about how bad the market is since November. This is in an uptrend with high relative strength. It's extended, but this pattern, that doesn't bother me. Alignment Healthcare, don't know exactly what they do. I don't know if they're in the payer space. Doesn't tell me. Earnings, last earnings are 227, so no earnings until May. Beautiful. Again, look at this stock in a horrible market with a reversal today, but still finishing up a lot, 6.3%. Desperado, Despergear, buyout candidate. MRX, Merex Group, this is one that is financial services. A little bit of a V bottom, failed breakout, probably skip it. NAOV, don't know this one, looks like a cheap biotech. Rhythm I looked at over the weekend and liked, and this one had a nice breakout Monday, a huge reversal day, traded lower and then closed higher and broke out. That one looks interesting if you really have to go long. UFG we've looked at. And then lastly, United Healthcare, another stock benefiting from the MA reset. So at the end of the day, I think the market is, are we close to that bottom? We might be. Will Monday's bottom hold? That would be great, especially if you still have a lot of longs. I'm careful here. So have a great day. Sorry this was so long-winded. Hope you find value in these, and we'll see you tomorrow.